what's up, everybody? Wednesday. What is it? November 13th. Wow. 2 more weeks of Thanksgiving. I can't wait. All right. Who's watching the impeachment hearings? Oh, boy. So, and you know, the media is always looking out for negative headlines, although I have to say that in recent days we have seen a lot more of the positive headline variety. I'm talking about the market making new highs, and not just reporting on the new highs, but saying new highs can be expected. We're going to get a Christmas rally. So that is a very stark deviation from the negativity, the deep, almost universal negativity that we have seen for most of this year, actually for all of this year up until very, very recently. And you know, I've been saying that eventually we are going to see sentiment shift at a market top. We are going to see the neutrals, right? I've been talking about people who are neutral or uncommitted. That has also been a feature of this market and of this advance throughout this entire year. You had a very highly elevated level of neutrals, people who were uncommitted. And I've said that we would eventually see the neutrals come off the fence when the market would rally to new highs, and not just marginal new highs, when it really started to go into some kind of a melt up. And we saw a little bit of this last week. You know, every week I look at the sentiment, AAII, that's the American Association of Individual Investors. They put out a weekly sentiment survey, comes out every Wednesday. I look at that, and we saw a little bit of a decline in that neutral sentiment, but it is still above the historical average. And you know, I believe we're going to see that thing eventually come way down to a very low level, and that would probably coincide with some kind of a top. Now, I always prefer to be a buyer in this market, and the reason that's true is because the fiscal support. I mean, everything is all about the fiscal support. And market corrections in an environment like this, when you have historic levels of fiscal support, that's all they're going to be, is market corrections. You're not going to have a full-blown bear market. You're not going to have the economy go into a recession. So really the strategy becomes buying the dips or adding or building your position on the dips. Now, a lot of people, and it's very obvious to me because I'm really involved, not just on a personal level, but I'm involved with people who are subscribers or people who I help and I mentor, and I see it every time. Whenever there is a market dip, people become frustrated, they become anxious, they become frightened, they bail out, they maybe cancel subscription, right? Things like this. So I see the behavior. It's very clear. It is a self-sabotaging type of behavior. And I mean, it's just, that's human nature. And the irony is that kind of human nature is the type of behavior that will doom you. All right? You're not going to end up making money. You're not going to end up being successful if you panic and react in that fashion. I try to help people with that. So you really have to look at the big picture. You have to keep that in mind. There are going to be opportunities within that macro picture, like when I talk about these reserve flows, which are tied to the monthly cycles of government spending, where you see reserves building into the banking system, causing a reaction. Then you see reserves coming out of the banking system, causing another type of reaction. If you understand the link between those phenomena, you could take advantage of that as a trader. But the big picture is that we have a record amount of fiscal support. It is, and by the way, like I've explained to you a number of times, this isn't really by design, although some of it is because Trump really has significantly increased defense spending, but it's really automatic. It's part of these automatic stabilizers like Social Security and Medicare and Medicaid. And as I've been explaining, because of the population aging now, you have the baby boomers, the roles of recipients are growing every single year. They're growing every single day, every single week, every single month. And that's going to be the case for years to come. So you have this expanding social safety net, expanding income being pumped into the economy, and this is completely overlooked. I don't hear anyone else talking about this except for myself. It's just like I didn't hear anyone else talking about the debt ceiling and the effect it was having on the bond market and yields and the yield curve except for myself. I mean, I try to tell you, you come to me, you get insight and information that you're not going to find anywhere else. Yeah, there's MMT people talking about MMT, academic concepts and theory and stuff like that, but they're not out there in the market trading. I guarantee you. And none of them that I know come from a background of having been a floor trader and a member on 4 exchanges. I mean, so come on. What I do is unique. I've added to the MMT understanding with insight into these overarching regulatory constructs which cause the banks. I mean, these things, and Jamie Dimon said it a couple of weeks ago. When that whole thing was going on with the liquidity crunch and the overnight lending rate, when it was spiking up, and Dimon said, hey, look, we would have been happy to lend out reserves, but we are under restriction due to the regulatory environment. And that precipitated a call from Treasury Secretary Mnuchin to Jamie Dimon, where I think Dimon suggested, hey, you need to lighten up on these regulatory constraints because they create these problems in the system. So we'll see what happens on that front. But I've been telling you this all along, way before this stuff becomes public. By the way, here's another great example. Today in the news, they're talking about the October budget deficit now is 25% higher than same time last year. My people already had that. I put the deficit numbers out every single week in the report, and as a matter of fact, if I wanted to, I know the deficit every single day. Now you can too if you learn how to read the daily treasury statement, and of course I have a video course on that, Understanding the Daily Treasury Statement. All this stuff is on my website, pitbulleconomics.com. Go there, sign up for a 30-day free trial of MMT Trader. Get with it, people. Get the knowledge, get the understanding, get the insight, know where to look for the data, and get the mental game. That's what you need to make it all happen, to put it all together, to become successful as a trader. And don't panic when the market sells. Don't panic regardless of what happens. Learn to manage your positions, learn to manage your emotional state and your behavior. You'll be able to work out of any bad position. Again, I'll give you the example when I was doing my Forex course, and you could buy that course at my website too. I used to ask participants in the course, give me a trade right now, totally unplanned. I have no idea what trade you're going to give me. Give me even the worst trade that you could think of right now. Let's say the market was making a big up move in some currency pair. I would say, tell me to go short right now. And I would work out of that trade every single time. Real time. Not like going back and say, oh, here's what I did. No, real time. I would work out of it. So, there you go. All right, everybody. Have a great day. See you tomorrow. Bye-bye.